Welcome back to FTfm. Cybercrime and data hacking are never far from the headlines these days, with thieves managing to steal important personal data from credit card companies, banks and even governments. Joining us to discuss how wealth managers are responding to the issue of cybercrime is Liz Field, Chief Executive of the UK Wealth Management Association. Welcome, Liz.
Morning.
So is cybercrime on the radar of wealth managers?
Yes, it is on the radar of wealth managers, hugely important subject for them, mainly because of the huge amount of sensitive personal data that they hold. They need to know quite a lot about individuals, their lifestyle, obviously their bank account details, so that they can pay them some of their dividends. So yes, they do need a lot of sensitive data, and they do therefore need to ensure that that is safe.
But do wealth managers really need to hold this amount of personal data, or is it an unnecessary risk?
There are two reasons why wealth managers need to have this data. First of all, from a business point of view, they need to know their clients. They need to know about their lifestyle. They need to know about their personal circumstances. They need to have details of their bank account. So to know that client, to understand that client, to make sure that they're investing for their purposes, what is their appetite for risk, for example, they need to know that detail and that data on that individual. The regulatory reason is that you need to evidence that you have ensured that what you've invested in is suitable for the client, and you need to ensure that all of that is evidenced for the regulator.
But is the data actually held by the wealth managers actually safe, or are they actually exposing their clients to risks?
Yes, it is safe. The data that's held within a wealth management firm is just as secure as any data that's held within a bank, for example. So the sorts of things you would expect them to invest in, IT systems, security, firewalls, yes, they do that. They're also ensuring that their staff are well trained so that they know what to expect from an email. They also ensure that their clients are aware too of the sorts of things that they may or may not get from criminal factions. But also, one of the strengths of a wealth management firm is the individual relationship that they have with that person, with that private investor, which means that they can apply a common sense lens to things that they see and think, actually, does this look right? And if it doesn't, then that's when they have an alert.
And are we seeing an increase in the number of cybercrime attacks on wealth managers?
Well, let's have a look at the amount of money that cybercrime is purported to be worth. 560 billion globally, 27 billion in the UK. It's big business for criminal gangs and individuals. So probably yes, that it is on the increase. If you look too at innovation within the wealth management sector and the increase in digital, trying to ensure that individuals have access to their portfolios, for example, for every new innovation, there is then another door for a hacker to try and knock down.
And what is the Wealth Management Association itself doing to encourage its members to take the issue of cybercrime seriously?
There are a couple of things that we're doing. We're working very closely with the National Crime Authority to educate them about wealth management. What is the difference between a wealth manager and a bank, for example? We've set up a wealth management forum with them so that we can exchange information and then pass that down to our members. So we also operate an alert system, so when one of our member firms tells us something, confidentially of course, then we will then pass that information with our alerts down to our members so that they're aware of what is going on and they're then prepared.
Liz Field, Chief Executive of the Wealth Management Association, thank you very much for joining us today.
Thank you.
And for more on this topic, go to ft.com/FTfm.